You're a sole proprietor. So let's talk about what your financials look like. You're a sole proprietor. That means you started collecting money for goods or services without setting up a legal entity. That's great. This is the starting point for all businesses. So let's talk about what your financials look like with this type of structure. Regardless of entity type, most financials look similar, with the exception of the equity section. The reason for that is that depending on the entity type, the return of capital, owner draws, or owner distributions are all handled differently. This example is showing the financials for a pet store business and a consulting business, both of which are sole proprietorships. The main sections of the balance sheet and profit and loss will always be the same. Your balance sheet has your assets, which equal your liabilities plus your equity, and your P&L shows your sales, your cost of goods sold, and your overhead. It's your sub-accounts that change based on your entity and your business type. For sole proprietorships, if you contribute money into the business to keep the bank account full, that's an owner contribution. If you take money out of the business, that's an owner draw. There's no profit and loss effect to putting money in or taking money out. It's not income when you put money in, and it's not an expense when you take money out. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.